Hey, everybody. Welcome to Bootleg Weekly. Roy is going to be just a few minutes. I think he has to restart his computer or something like that. But glad to have you all. I think we have a good show today. We're going to be talking about some Claude things. We're going to be talking about Stripe potentially buying PayPal. We're going to be talking about HIMS and the earnings results that HIMS had. There's also Meta and AMD that made a deal. Yeah, there's a lot of stuff for us to talk about. It's been kind of a crazy couple of days in the market. It's going to be really interesting to see if actually Stripe does buy PayPal or to get Roy's thoughts on it. But yeah, we'll see when he joins. What happens there? Maybe I put this on actually. Okay, there he is. Hey, man.
Hey, sorry. Yeah, my power company turned off everybody's power in the area for some reason. I guess they're working on something. I forgot about that, and I still have a potato of a computer until I get this dissertation done. I don't want to change out things midstream, so it takes a while to boot up. My apologies, guys. Tevis, how are you?
I am good. How are you?
I am Tanner. I mean, I am well, other than being late. So yeah, we got a lot to talk about tonight. It's kind of funny because we have two names that we formerly and very recently held that we're going to talk about tonight: HIMS and PayPal, as well as some other news as well related to Anthropic, SaaS, a few other pieces too, and yeah, air test systems. So looking pretty good right now. Tanner, you know the meme, you know it. Yeah, full disclosure, we're done with PayPal. I'm done with PayPal. I'm not looking to re-enter, but we'll still discuss it. A lot of people are wondering about the buyout rumor and also HIMS. Tevis, you mentioned on X, but not everybody knows. What did you do with HIMS after earnings?
Oh, yeah, I fully cut the last couple hundred shares I had of HIMS. So I'm fully out of HIMS for good. That I didn't even wait till the earnings call. That report was just confirmation of some growth that had died down. I know people are like, yeah, this is the bottom, and it could very well be the bottom in terms of, well, they're giving mixed results for growth and whatnot, but I just think from a growth rate perspective, it just completely caved. Let me see if I can pull up some stuff.
Yeah, I'm just pulling up HIMS house, and I did look a little bit deeper, but not super deep into him. So I've not like read the SEC filing or anything like that. But it's tough. Now, for me, still, I don't know that the HIMS thesis is really fully dead. It was kind of interesting that they really waited until towards the end to even comment on Novo Nordisk, but part of that is some legal issues, and they're kind of getting hit on all sides. Of course, being sued by Novo Nordisk. The Department of Justice is inquiring into them, and now the SEC as well, per the 10K. Revenue growth is slowed. I think they acquired 20,000 new customers. Yeah, it's kind of rough. And the guidance was meaningfully lighter than many were expecting. And this is, of course, a firm that you and I know fairly well, that they guide very aggressively. That's one of the things we actually really liked about it. So unless they're suddenly shifting to super sandbag mode, that guidance is pretty concerning, especially given their acquisitions. Now, it didn't include the most recent acquisition, but yeah, it still looks cloudy and murky. And when I sold, thankfully, is a higher level. But I was just thinking, there's better plays out there, and I moved into Nebius, which has been treating me pretty well. So, did you see? Is there anything like with HIMS that stood out to you in the quarter that was ultimately the trigger of why you sold that last little bit, or what were you looking for that could have made you reverse course and actually add instead of leave?
Well, I think the guidance is definitely one thing, right? So they only added 40,000 new subscribers in Q4, so 2% higher than Q3. And I mean, this is the post that I made around exiting my HIMS shares. and you can see what that growth rate looks like in terms of subscribers. Like, it just fell off a cliff essentially. And I think a lot of that is as a result of like the GLP-1 sort of troubles that they're having. And then they ended Q4 with 929 million in cash and investments. They bought back $80 million worth of stock in Q4, but they did so at an average price. I believe it was like $39 was the average price of them buying back stock, and the stock's like at 15 right now. They have 225 left in their buyback plan. So, I mean, what the market cap is like 3.5 billion. They have 225 million left to buy. But so look here, the guidance expecting 15 to 24% for the year, 2 to 7% in Q1.
Yeah.
I said, look, now we know why they're so focused on international expansion with Zava and also with Eucalyptus, because their growth is seriously fading away without them. And they mentioned here that international is going to become a material incremental growth driver. So I do think they will continue to grow, but the business looks drastically different from a growth perspective today than it looked a year from now, or a year ago, let's say.
Yeah.
So yeah, sold the remaining. I didn't have a lot of HIMS left. It was like 1% of the portfolio. Granted, at the beginning of this year, this time last year, HIMS was like 20 something percent of the portfolio. And thankfully I cut the majority of it when Andrew Dudham sent the eyes emoji. And I cut a good chunk before Q3 earnings. But then I posted last week, even before earnings, I think it was like a 22, 23. And I was like, hey, I'm out of HIMS. I'm just keeping a small portion just to see what earnings is like. And the guidance is really what I was looking there. And it's not the best. So yeah, fully cut out of the position. I would say that to try to look at it somewhat objectively, like, it's a $3 billion company. They are still growing, and they just acquired a $1 billion company. They have cash on hand. They're well capitalized. Like, it's not like a horrible investment to buy at this level.
Yeah.
It's just like, what do you think of the prospects of the vertical itself? And then also you have this overhang with like the FDA essentially opening an investigation, the SEC opened an investigation into HIMS. Even worse.
I was actually surprised it took them this long. Like, it seemed pretty obvious to me. That was actually the first like yellow flag. We were talking about HIMS a while ago. There were some others. I'm like, yeah, it's a yellow flag, but no big deal. That was like, dude, this is not good. It's a terrible look of a CEO pumping the stock. Essentially, I mean, he could argue it's just an emoji, whatever, right before a sell. It's really sketchy. And at best, even if the SEC doesn't find it illegal, it's in very poor taste. And I'm a little bit surprised we didn't see more rumors. But that wasn't even enough for me to get out. And I think for you and I, like, the issue too is, in either of our mind, we don't know that the thesis is fully dead in HIMS. And I do see some people that are buying now. I think it's not expensive. And if you're willing to hold it long term, it could be pretty interesting. The problem is everything else fell too. Not everything, obviously. But if we were in a market where, let's say, a lot of the names that had fallen since October had just held firm and were flat, I don't think I'd be out of HIMS. I think I would have held. But ultimately, like, I don't switch in and out of positions usually as rapidly as I do, except in this type of environment where a lot of names that I've wanted in for a while correct, like even some down like 50%, and nothing has changed materially. And I'm like, okay, let me think about this. Which do I have a higher conviction in? Is it HIMS right now, which is kind of cloudy, or this other name? And if it's close, if the other name, I'm like, a little bit more conviction there, I still wouldn't sell, but it has to be meaningfully different level of conviction. Doesn't mean I get it right. And, for remaining shareholders, like, I hope it works out. Like, this is one of those where it wasn't, the investment was just about making money, but I was also hoping, like, hey, I hope that they continue to disrupt this business in this space. It's really good for consumers overall. Even if there were some things that I had question marks on why they're doing. Oh, one other thing I wanted to mention too, the Q1 guidance is against the full force of GLP-1s last Q1, that they were still able to sell into that because I believe it was April when the 503A exception closed for them for the shortage list. So they were able to just absolutely ramp sales. Of course, they had the Super Bowl commercial as well. So keep that in mind. Like, it looks like terrible revenue growth. You look at the full year, it's not bad. But again, some of that is against GLP-1 headwinds. So it's not as bad as it looks. It just, there's not enough there for me to be interested, especially with all the overhang from the SEC, DOJ, and so forth.
Yeah, and like there's a lot of deals, right? Like, you're not just trading in a vacuum. So yeah, that's HIMS. I don't think there's anything more I would have to add on there. I heard the call was pretty bad. I didn't even listen to the call, quite frankly. If I'm being honest with you, I heard it was pretty brutal. They only got asked one question about the lawsuit, and it seems as though they didn't really give too much.
Yeah, and that's like fair enough. Like, usually your legal counsel will tell you, do not talk about this at all.
Mm-hmm.
And most say you can't talk about it because of ongoing litigation. So yeah, I don't fault them for that. Like, it would have been good if they had mentioned that at the very beginning, because I even saw like people like HIMS House and other bulls, a Nighthawk Capital, I believe. They were like, why are they not mentioning Novo at all? Like, dude, tell them that at the front end. Just be like, hey, I know there's questions. We can't talk about it because litigation. We'd love to, but yeah.
Yeah. I sent an invite also to Sam. Let's see. I don't know why. I think my Twitter's been bugging out all day. And we'll see if Sam joins, and maybe we can talk a little bit of Lemonade as well, because that could be interesting. But maybe we want to jump into this Stripe PayPal news. Roy, you put out a post on your thoughts on this.
Before we do, let's just briefly touch on Air. Can we acknowledge?
Yes,
I have a new number one position, guys, and it's not because I bought more of it. I did previously, again, with the former PayPal funds, but it's Air Test Systems. It took SoFi dumping hard despite adding to it. It took Robinhood. I didn't change anything with Robinhood, just held on to my shares, which is my number one position, collapsing as well. And Air Test Systems up more than 100% from my average. So yeah, it's my number one position. Barely. It's a micro cap. Full disclosure, like I put out when it was like $20 or something. I said, I put out a $70 price target, which it's based on a lot of different factors. You guys check out the video yourself. I gave you the gift of Air during our gift exchange, and so far it's off to the races. It is a micro cap though. This is volatile, and a lot of this move, like the last couple of days, it's fun, it's exciting. There's no news behind it at all. There was last week or in the week before. This may be front running like NVIDIA earnings, which maybe they're expecting Jensen's going to talk up, which he of course will. But I think there's a lot of traders here and speculators that'll take profits at some point. So don't be surprised if we see like a negative 10% day or something this week. It absolutely could happen. For myself, all I did was sold 25% of my position. Didn't sell, but I sold covered calls at 50, which is when I sold it, it was like 39 and some change. No, actually, I sold it yesterday. No, that's not right. I actually sold some more today, bringing it up to 25%. That's what it was. The reason why is, Tevis, it's hard for me to hold a micro cap that is like about $1 billion market cap. It was screaming buy when it was in the teens. Very good buy in the 20s. I think still in the 30s. It's still a decent buy, but am I like willing to just let it run up to like 40% of my portfolio? Not at its current sizing, no. So even though I think that there's higher upside, I'm fine with taking profits if it ends up by, I believe it's March 20th is the expiry, being at $50 or more. And actually the premiums that they paid were very, very nice too. So for you, Tevis, any interest in adding to Air, or are you doing the opposite, taking some gains? Not wrong either way.
I mean, I sold my Air calls yesterday, and we talked about this.
Yeah.
And like I bought the calls when Air was like $22, $23, and I sold them when it was $33, something like that. And this thing was up like another 14% today, something crazy.
Yeah.
So it's just
Yeah,
like, damn it, like I should have waited one more day. But yeah.
I saw the pre-market and I had a hunch that we might see this again. But I mean, like it's a microcap and it will move like for no news reason at all. Like we could even see like a negative, like we saw that huge spike when they had credible news. This is a couple of weeks ago when they actually sold some of their Sonoma units, the package part burn-in, which was just basically a follow-through on what the CEO was talking about. I took him seriously. I know many people here looked at those comments and were like, hey, I'm willing to make the bet. That paid off really well. But yeah, since then, it's mostly speculation. Now, this entire earnings season, I think, has confirmed the thesis of it, the automated testing equipment being a very solid growth vector, including Teradyne. There's some other names that are smaller as well. Air is very much more specialized, but yeah. So would you, let me ask you this, because you're out of Air.
No, I have shares. I'm out of the calls.
Okay. You have shares. Nice.
Yeah,
Good.
yeah.
I misunderstood that then. Okay. So let me ask you then, Travis.
I had call options for $40 for September. Like, you know how volatile those things are? And so I was just like,
oh, yeah.
All right, let me just take profits on those real quick. And
yeah. Short-term stuff, especially in something like this, it's tough. Like long-term, like even like if you look at the options chain, I don't think it's worth buying options on this. It's just buy shares. It's easier. But what would get you interested? I mean, obviously it's probably price falling and it well could, but what price level would you be interested? Not saying that you'd buy Air Test Systems.
I mean, I already own it. At what price would I buy more?
Yeah, add.
I wouldn't even see the thing is, man, like this is one of those positions where like I haven't done so much homework on it myself, nor do I have a concrete thesis. Everything I know about Air is from our conversations, basically. I haven't listened to an earnings call for them. I haven't, so I'm just riding on your conviction. And I think with that, with any stock that I'm riding on somebody else's conviction, I would just probably cap it to like 3% to 5% at the max.
That makes sense. Absolutely makes sense.
That's still way higher than what I am right now. I think right now for Air, for me, especially without the call options, it's 0.5% of the portfolio, but it's up 77% for me. So I'm kind of kicking myself for not buying more. It's crazy that it's your number one position now. That's wild.
Yeah, I thought there was, I think I mentioned a few weeks ago or maybe a month ago, I'm like, I think this could become my number one position with the way that Hood and SoFi had fallen. I got out of PayPal and there's nothing close to those two as far as sizing except for Air. And I'm like, it could become my number one without me buying anymore. And I did add a little bit. I think, of course, when I sold PayPal. But yeah, regardless, it's a little bit different story for me than like Robinhood or Palantir. When those guys were running, I did take gains along the way, but I also had leaps. And I basically was taking gains on the leaps. For Robinhood, initially, I didn't even have shares. This is one where I've just have purely shares, but like the growth is not, it's lumpier. It's not, there is a residual growth basically from selling the die packs and wafer packs, but it's not like Robinhood where it's pretty easy to chart and see. It's not like Palantir where it's going to go up and to the right and that's all it's going to do basically, sometimes faster than others. And so I'm like, it's prudent to take profits. And guys, if you're sitting here and you're like wondering if you think you could take profits or not, when Air like goes down 5%, like if you're feeling nauseous and sick to you, like that's probably a sign that you need to take some off the table. So this is a name that'll probably retrace some. I don't know that we'll see deep into the 20s again, but yeah, it's exciting.
Man, the last time you said that, I was just like, I should cut my call options, and you were like, well, it could fall to 28 again, and literally the next morning it fell to 28, and so I don't know. I could definitely see it falling into the 20s again, but again, I don't know too much about it to have an educated sort of comment.
Yeah. And at some point we will do a stock tank episode of just where I'm at. I hope to have it earlier, but now I've got the dissertation date set for early next month. So once I get clear of that, then perhaps. Let's move on then and talk about PayPal, which is actually paying off for some, especially newer shareholders right now. So we had yesterday rumors, but it's published on Bloomberg. They don't just throw these out for no reason randomly. But rumors that there was multiple unsolicited offers for PayPal that had gotten to the point where PayPal was actually talking with banks, which is usually they're credible enough that you go there basically for them to take a deep look at the offer. That's something like a Goldman Sachs, Morgan Stanley, JP Morgan Chase. And at least one of the bids we heard was from a rival. Now, I questioned who the rival would be, just because a lot of PayPal's rivals are, even despite the market cap, significantly smaller than PayPal. So usually doesn't make sense for a minnow to gobble up a whale. So I thought maybe JP Morgan Chase might be that name because they're trying to break into payments. Stripe was one I didn't see coming. Stripe is not known for doing mergers and acquisitions, but that's the name that actually came out today, that it looks like that it's a pretty good chance that it is Stripe. Another new article that came out on Bloomberg that made that bid for the whole, buying the whole of PayPal. So that's, of course, caused the price to spike up. And by the way, again, I don't have any PayPal left. I hope that shareholders benefit immensely from this, because you guys deserve it, honestly. So I'm not mad, like, if it runs up and rolls up. Like, I'll be sad if it's a huge, ridiculous gain and I missed out. It's a frustration thing, but I still hope that you guys profit immensely. Now, there's a couple of things though with this. So the other offers appear to be an offer for part of PayPal's business, which probably makes more sense as kind of a baseline scenario. The challenge is a lot of shareholders are giving very high valuation on PayPal. They're saying things like, $125 a share or something like that on PayPal, which it's not been above 100 in a long time. Yes, there's a lot of free cash flow. Yes, it's undervalued, definitely. But the average premium for PayPal or for fintech tends to be 30 to 50% from when the rumors were initially floated, which would put us at about a $52 to $60 share price. Now, it could probably be on the higher end of that, and it could go higher. What it would actually take is multiple bidders kind of bidding things up. Or some things that we don't know about PayPal that they're very excited about. Like, if, for instance, if Stripe wants to break into advertising, they're like, dude, what they're building is awesome. We want that. They could offer a higher price. But I think there's a reason why we didn't see any even mentions of this until after they collapsed below $50 a share. So I think it's unlikely that, we're going to see even $70. Now, what were your thoughts, Tevis? And I'll share a little bit more too. I see if there's some comments there.
Yeah, I'm. So first of all, welcome, Sam.
Hey, Sam.
Not sure if you're there or just getting set up, but I think in terms of PayPal, honestly, man, like, just the buyout rumors will force the market to like re-rate the stock.
Yes, absolutely.
Because it'll force people to just look at it again with fresh eyes. And I think that attention draws more interest to the table. So it's going to be really interesting. I don't know if the Stripe is real or not real. Honestly, a part of me wants to just buy a couple hundred shares just so I can be like, in it as a trade to see how it evolves. But I think that's the part of me where that wants this to be true, that wants somebody to actually buy up PayPal. Yeah. It could also just be like, hey, these are just rumors, and somebody, like, what, Bloomberg reported them, like they've never reported something wrong before. Yeah. Like, it's such a powder keg that's been beaten down for so long that just the rumors alone have the potential to bring it up, because this jumped once yesterday on potential buyout rumors, and now it's like Stripe is named and everybody's covering the Stripe news. And so, like, in my mind, nothing is real until I see an actual offer or a price, or some type of deal structure as to what that ends up being. But even if we don't see that, I think we're going to be trading higher on PayPal for the next little while, because there's always that possibility that we might see something like that.
Yeah. I'll do a separate video, even though I'm out of PayPal. I know the company pretty well in the space too. like who the bidders could be. Best case scenario, though, just to kind of cut to the chase, because I don't think, Sam, you're here to talk PayPal, is
It's fine.
is multiple bidders. That's really where you could see a significant. By the way, somebody mentioned, go and throw that up. Somebody mentioned that SoFi was moving up, and that's an unusual move after hours. I didn't catch any news. If you guys do see something, let me know.
I think Kramer was talking about it, but I'm scanning for other potential news. I'll let you guys know.
Anyway, where this could actually see meaningfully higher than the price that I shared is multiple bidders. And this is why I think that the rumors are very credible. Yes, Bloomberg does get some things wrong, but when you usually have some unsolicited bids and offers, you want to make some noise about that. And the reason why is competition. So Stripe is the one making this offer. There may be others that are like, oh no, if Stripe gets in, we're going to be really wrecked. So they're going to start making offers as well. Of course, they're hearing multiple unsolicited offers. So probably things like Venmo, I think especially, is attractive. And other than like their branded payments, that's the most attractive part of PayPal's business. And it could be very attractive to a lot of people. Braintree is their white label service. I think Google and Apple, it makes a ton of sense for, because they have Google and Apple Pay, but they always run that through a payment service provider. Like, really, there's just three. There's more than three, but like the big three are Adyen, Braintree, and Stripe. And so they could start bidding more for that as well. There are some other pieces that are interesting, like the stablecoin. We saw rumors today that Meta is looking at getting back into the stablecoin after their debacle with Libra previously, issues with regulators. For Stripe themselves, like the one thing that kind of, I think that probably a buyout will happen, but at a lower price than like the high end of what people are expecting. The board of directors seem to have some fatigue with PayPal, and they seem like, I mean, there's obviously upside, but I think that they want out. And if so, a deal gets made. If they're like insisting, nope, you got to pay us $125 a share, that deal is not happening. Nobody is paying that or anywhere close to that. I'm sorry, but yeah, multiple bidding war. We could see $70 a share, $75 a share, but I think it would take like three very credible offers, or that they do really PayPal is more valuable in their individual units. So Braintree, Venmo, and then all the rest of PayPal is, I think, much more valuable than just buying PayPal whole. The last piece on this too is regulators. That's really the wild card here. We've seen some move against big tech or the hyperscalers getting into payments in the past. I don't think that's too much of an issue now. It would be if it was the Harris administration, but under the Trump administration, I don't think so. But with the payment service processing, the Braintree being acquired, in addition to everything else by Stripe, you're essentially shifting from three players in the market, which is pretty healthy, Adyen, Stripe, and Braintree, to just two. Now, I think regulators might say, no, absolutely not. You can't have this piece. And if so, there's a lot of options there. Braintree could become its own separate company. It was, of course, in the past in 2013 when it was acquired. More likely, I think there would be some interest in that by some others. And also Stripe could acquire, like there's parts that like the stablecoin that don't make any sense for Stripe. They're building their own layer one anyway for payments. I don't think that they'd use PayUSD, which sits on top of Ethereum instead. So, yeah. Well, that's good. We'll take all the pump we can get as SoFi shareholders.
Sam, what do you think about this PayPal Stripe news? Like, do you put any weight to it? Do you think, what do you think? Where do we think you go from here?
I mean, they obviously have a big brand. That's something that has a lot of credibility. So does Venmo too, peer-to-peer transactions. Also, there's technology that's salvageable behind PayPal. I mean, they've been around for so long. I honestly thought it was going to be Elon Musk with X or XAI. I didn't think it was going to be Stripe. Because it would have been funny if PayPal did like full circle and came back to Elon after that at a much more attractive valuation. But yeah, we have. You're right. It did come from Bloomberg, but when prices come down this low, especially the multiples for a lot of companies, like very popular companies, that's when private equity starts coming around to take over. But in this case, in fintech, it's less a private equity usually comes to take over whenever it's like software technology or something. So in this case, maybe not so much. This is more about just taking the whole market. it does actually make sense for Stripe to take them. It could be true, but I also do agree that it's not going to be like $100. Like then they would have bought them before. Like why buy them now, right? So
Yeah.
yeah, we've seen this happen so many times, and the premium is never as high unless like we're in like an extreme bull market and the company's like killing it. Like Palo Alto with CyberArk, they bought them at a pretty big premium, but that's because they were the leader in their sector. Confluent as well with data streaming, basically is going private. No, they're getting acquired by I believe IBM. Don't quote me on that one. I think it's IBM. I'm not sure. I know HashiCorp was acquired by IBM, but I don't have much experience in fintech acquisitions. I've only had experience with software.
Yeah,
But yeah.
But it's exactly like you said, like in a raging bull market, which we've not been in for fintech in a while. You have silly things like Honey being acquired for ridiculous prices, or you have Afterpay acquired by Block for ridiculous prices. But that's not really the case right now. This has some distress. It's not like super distressed. I think that they did sandbag their guidance and everything, but there's a reason why we didn't have rumors or at least hear about them until after they tanked below $50. Even in the 50s, like PayPal is undervalued, even assuming negative growth, which they're doing better than negative growth. Like it shouldn't have gone below $60 a share, but I mean, like here we are nevertheless. So the usual premium I shared with Tevis beforehand for fintech is usually 30 to 50% premium over where the shares were before the rumors actually began circulating. So that would put us at $52 to $60 a share. I think they probably get closer to the high end on that. And then the upside is if they do the sum of part, they subdivide it out, that'll probably carry a premium or multiple credible offers. And what you said, Sam, as far as X, they could still get in this. I think that might be one of the reasons why this has been floated out there is just to see if there's other interested parties like a JP Morgan Chase or even X who wants to break into payments. That makes a lot of sense for them. And Elon, like if he gets in a bidding war, it could get meaningfully higher than I'm expecting. I think it's a big
Yeah,
if.
yeah.
I think like also one thing to keep in mind here, guys, is like the valuations of these companies. Like Stripe is what, 120 something $billion at their latest.
150.
Is it 150 now?
I think it was 150, right? That's what I saw today.
I thought it was 129 or something like that. But anyways, so
Maybe.
like what it's 4 times, 5 times bigger than PayPal. I think if these rumors heat up and the stock catches a bid, it's also gonna, I think, investors are going to start asking the question, like, is this going to be a good acquisition for them? I think Stripe should absolutely buy parts of PayPal, but not the entire thing. But I wouldn't be surprised if a bigger, company comes in. Was one that we were talking about last week to potentially buy PayPal as a prime contender. But again, I do think, to my earlier point, all we really need is we need to start having the conversation, and that itself is going to create more buzz around this.
Yeah. And I think, the odds of it getting done, in part, it depends on regulators, but I think even there, they might have to be creative and say, okay, well, we can't have Braintree or whatever. But as long as they're not expecting like some ridiculous premium, like I don't think there's any way they get $90. It's very difficult that they get $80 a share even. But, if they're asking and holding out for that, I don't think Stripe offers that. It's just not really in their blood. They're not the type of company to do that. And the wild card, of course, is Elon gets involved. Yeah, maybe.
So if they were $60 a share, that put them at like 45 billion.
54, I think.
That's crazy. Like they'd have to take out so much debt to do that. That would be so bad for Stripe. That would not be good for them. And Stripe is private though, so it's not as bad, right?
And not even that, dude, but they're IPOing this year, right? Like that's the rumors at least. So it's just like,
I don't know. Like they
wouldn't do it.
resisted IPOing forever. So this would be something that I think if they did this acquisition, they probably would IPO. But if they didn't, if they stayed private, if they did acquire PayPal, like the really neat thing is, unlike what happened just recently, where they said, "Hey, let's jettison the CEO," and we don't know whether or not they'll really stay the course. It sounds like they kind of do, but the new guy, like he's a hardware guy in charge of a software business. he understands the business. He's been on the board for a while, but like his plan was, let's cut 2,000 more people than what we planned over the next couple of years. Like, that's not really a plan. So, but under Stripe, if they remain private, they can continue to see the opportunity there, as far as advertising, as far as what's happening with Fastlane, as far as perhaps what's happening with PayUSD, even though I don't think it's as attractive, and not have to answer to, public shareholders on a quarterly basis, which is ultimately why they jettisoned Alex Chris. So.
Yeah, so we'll see what happens. It's going to be interesting, especially because we had back-to-back PayPal news. Does it make either one of you want to get back in to PayPal, or no, not really?
No way.
That's what I thought.
Yeah, my thesis was that this was a company that was horribly mismanaged, that new management will lead them in a new direction that would help them grow and actually realize their potential instead of being completely siloed. And I think they would have eventually got there. It just was taking longer than expected, and they ran out of patience. But when it pivoted from that to just pure valuation and buybacks or buyout, that's not enough of a thesis for me, other than like a swing trade, which all my swing money is tied up anyway. So yeah. But there are people that are like, hey, that's their thing, that they love to get into these rumors and potential acquisitions.
Yeah.
And if it works for you guys, or if you like it, there's nothing wrong with doing that. That's not how I invest personally.
Yeah. Shall we chat about Lemonade real quick? Because that was an interesting earnings, probably their best earnings, honestly, in companies ever reported. And yet the stock is down 20% or something this week.
It is bad. It's back under $50. I don't know if it closed above $50 or not.
It's at
and
50.
It was it was at like $72, $74. The pre-market, and it's wild that they completely sold off. And I'd really attribute a lot of that to the macro, right? Like, you have a lot of software being sold off. You have AI basically thought to be disrupting all these sectors, especially fintech, which is crazy to even think about. And fintech is just on fire right now, like on fire to the downside. Like, they're just selling all fintech right now. Which did you see the Mercado Libre earnings? Like, I saw the earnings, they were good, and it was up like 6%. And when I checked an hour ago, they were down 6%, right? It's brutal out there. And we know Mercado Libre is obviously e-commerce it's the Amazon of South America. More importantly, they have Mercado Pago, and fintech is just not getting any love lately. So I don't know why they were down, but fintech is not in favor right now. And nice to see SoFi up 5%. I mean, if market comes back, it'll probably stick. But if the market is just like a dead cat bounce, like, that sucker's going to be sold off, right? And it sucks. It really sucks, because these are really good companies that are getting sold off, and they've had a premium for a while. I'm not going to lie. Like, Lemonade at $100 was pretty insane. Probably should have sold then, but didn't sell soon enough, if that was the case. However, I guess at a certain point, just like, this is just what the market's doing, right? Like, they're a better company than they were a year ago when I bought in. And now it's just, I don't know why, especially when we're on the brink of profitability, and they're obviously winning market share, and they're obviously contracting their cost and spend, right? So they're, not only is their gross loss ratio going down, which means that they're actually paying out less in claims and getting more in premium, and then their margins are improving, but also they're expanding a lot on their largest business, right? So I think right now pet is their largest business, right? Which is weird, because I actually didn't think that was going to be the haymaker right there. I thought it was going to be auto, and it's not. It's pet insurance, and I'm just like, wow, I didn't think that was the case. But all right. But at a certain point, you got to look around you, and you need to be like, listen, unless the market like really comes back, which I got to be honest, I'm not like, holy cow, guys, we're going back to new all-time highs in the Qs tomorrow. Like, we need to see some like structural recovery, but also sentimental recovery on all of this. Today might have been the first day we saw it, maybe. You did see quite a bit of a bounce back, but you also saw Anthropic release more disruptive AI features, and the market still continued moving up. So maybe we did see the reversal today, maybe. But yeah, like these earnings were really good, man. Like it doesn't. I don't know why it got sold off. Like margin expansion across the board.
Mm-hmm.
Yeah,
Yeah,
for sure.
and pet is about what 3 times bigger than so 439 in for premium, um, Europe 60, car 187.
Yeah. So car is going to expand pretty tremendously next couple of
Hmm.
years as you continue to scale out and they take market share from the legacy auto businesses. And and I believe that EVs and auto has bottomed as of mid last year, right? So we had like a massive decline in EV sales and everything, Tesla, whatever it is, for a while. And we've somewhat found a bottom over here, especially as rates continue to inflect further downward. That
Hmm.
gives more pricing power or that gives more purchasing power for a lot of consumers buying auto, and especially younger crowd rising higher in terms of salary in the workforce, they're able to afford. And the Lemonade caters to the younger insurers, not and insurees, not like legacy ones who've been like Geico for like 20 years. Like they're not going to look to switch. Lemonade certainly is for them. They're basically getting free advertising through Tesla, right?
Right. Yeah, and that partnership is going to expand as well as Tesla continues to be successful too.
Yep. What are your thoughts?
Roy, this is not a name that you're in. Is like what at a high level, is there something that would make you be more interested in Lemonade or not really?
Not really. Like at most, I would look to swing it at some point. They look like a good name. It's just insurance is not a space that I have really want to invest in. Now, this is not health insurance, thankfully, but even then, I don't like insurance as a business. I'm not Buffett.
Yeah. Yeah, I think
Yeah.
I like them because they're on the right track in terms of their expansion. They're growing pretty quickly. Right here, keeping their expenses relatively in check while growing, and they're only $3.9 billion. So I think that the business has a good trajectory ahead. Um, it's going to be more of a slower play, let's say, throughout this year. Like I'm not expecting them to double tomorrow, although the stock is fairly volatile.
Yeah,
They are still operating at a net loss. So, but this year in 2026, we expect them to flip that. Um, yeah, like this earnings was good enough for me to go back in to Lemonade. Um, Really interesting to see this reaction, and I think like I'm not complaining because I'm just scaling back in uh, slowly. Uh, but yeah, I mean, this thing, I initially bought Lemonade at like 35, flipped it. I sold it in December in the 70s, and then
Nice.
it went to 100, and I was like, oh crap, I missed it. And now I'm at 50. So I'm buying back in, and like I'm pretty happy about it, especially because the earnings was like terrific, right? Very much a strong trajectory of beating their numbers. The guidance was really good as well. Maybe I can pull that up too. They're going to have a shareholder day as well later this year, so we expect them to announce more there. They recently had a day. Was it this fall in 2025? I think so, where they basically talked about like, hey, what does the next 10 years look like around Lemonade, and how are they going to continue to grow? And that was really interesting as well to just see the long-term vision there at play. So yeah, I don't know. The numbers look good. The growth looks good. Pretty steady. Valuation to me, at least, looks good. Um, but of course, it's something that is not like they still have a net loss.
The only thing that I'll say is I'd love for these guys to succeed. I hope they do, or Root or others as well. Like at least here in Houston, drivers are absolutely terrible. I was almost rear-ended twice today and nearly hit on the side by somebody that was just I don't know what they were thinking or doing yesterday. So it's like there's a lot of vehicle insurance specifically that have gone out completely because there are so many wrecks in the Houston area. So I have Tesla insurance, which is okay-ish, but man, this is good for consumers if they can succeed, and it looks like so far that they are. So,
Yeah, yeah.
Yeah, they're pretty unique. They have a pay per mile approach, which is very beneficial for people like myself who don't really drive a lot. So I've gotten many quotes. I've been with Metro Mile for a while, and now Lemonade, obviously. So maybe I was a little biased to buy the company in the first place because I knew about it pretty good for a while. I used to own even Metro Mile when they had their SPAC. Fortunately sold it before it had its massive downfall. Would have been nice to eliminate in the teens, but I did buy them like around 28, 29 bucks a while ago. Rode it all the way up to 100, didn't sell, rode it all the way back down, sold at 75. Not looking to get back in. I think there's plenty of other companies out there that are much more favorable in this environment. I mean, like AEHR, congratulations. Air Test Systems is obviously involved in the semiconductor supply chain. That's the
Okay.
stuff that's working right now, and that's the one those are the stuff that I'm looking for. I was actually thinking about getting an AEHR when it was 24 bucks, but I didn't pull the trigger.
Set an
Yeah,
alert. It's super volatile. It can fall. I don't know that it falls to 24, but if that's where you like it, set an alert, and the market might gift it to you.
well,
It's
yeah,
got given me silly entries before, even after like incredible news, just because it's a little bit more tracked right now, but like very few people are tracking it. So they'd like release some amazing thing or earnings that come out and like I was like, this is great. Why is it selling off to 20 bucks? I'm buying a whole bunch. So yeah, set an alert. If you guys are not shareholders, audience members, do your due diligence. Figure out what's comfortable for you. You may not like it. It's not for everybody, but
yeah.
it is
It's it's
working.
cl- it's clearly favorable that anything other than anything that's in like a semiconductor supply chain, memory, even anything involved in machinery is working right now. Mostly industrials, materials, utilities, power, all that stuff is working. But high beta, speculative stocks, non profitable, are just getting murdered. And they barely bounced recently. So I think that's a market kind of saying where things are going in the short term. Long term, it doesn't matter. I don't think I think if anything, it provides opportunity. But man, this is a difficult market to navigate. I'm not going to lie. This is not 2023 to 2025. This is a much different beast right now.
NVIDIA, can we talk a little bit NVIDIA? Does
Yeah, I mean,
Yeah.
Jensen save us, or is there anything that NVIDIA can do to kind of change the perception of the markets right now, which is twofold? Really, apparently AI is going to kill every single business that's out there, but it's also a bubble. So,
Yeah, and there's so
what are
many
your
things.
expectations for earnings, and do you think there's anything they can say or do that dispels either of those or both of those?
Um, to be honest, like they had an amazing quarter last quarter. They opened up 5, 6%, and they closed down like 4%. And the S&P 500 had an intraday move of 3%, which is a big move for the market. I don't know. I don't know. The market's going to make its decision no matter what. I don't think there's really anything we can do about it. And
Yeah,
Nvidia's going to kill it like they always do. They're probably going to guide up whatever it is, and
sure.
but they are expected to do that. The thing is like to what degree do they need to beat and excite the market enough to hold its value after? Like we know they're going to be cheaper after their earnings tomorrow. We know that we're going to hear all the good commentary. We know that Jensen Wong's going to pump a lot of stocks after just by calling them out and stuff. Like we know this is going to happen. The question is that going to hold after? Is that going to be enough to overcome whatever macro situation there is out there? Right. So it's a very unsure market to do. But all that set aside, dude, this is a $250 stock. Like there's just no reason why it should not be at
Oh,
this point, since they're the main beneficiary of all this capex.
yeah.
The main beneficiary. Like there's no reason not that they should not be a $250 stock if the market stays bullish on this stuff, right? But that's what it really comes out. We're really at the mercy of whatever the market makers want to do.
So, Tevis, are you going to solve the puzzle so we can get above 200 bucks? Maybe
I,
Sam doesn't know about this.
I was thinking about that. I need to work on that. I need to find it. It's somewhere around here, and
Oh no,
work,
that's bearish.
dude. I have cash secured puts for Nvidia at $200. So I'm gonna be riding those.
Ooh, in
I'm
the
gonna be
money, man.
He's like Tevis is just degen all the way, and so he takes one of the more
Yeah.
conservative strategies of cash secured puts. Like, how can I make this more degenerate? And I don't know, it works out for him, but
I
Are
mean,
they cash secured or are they like margin collateral
no,
secured?
I mean, um, if multiple things hit at once, then their margin is secured, but normally they're cash secured.
You guys are
Only
nuts,
Jim.
man. I mean,
Um,
it's probably gonna work, but it's like, holy cow. Like you can be in a sham if that thing does not work in your favor, but I'm sure you'll get out if it doesn't.
they're for March 20th, so I have some time to maneuver. Like if it pumps above 200 after earnings, I can close them out. I mean, like even I think 40% or 50% in profit right now, because I opened them last month.
Wow.
So yeah,
You open them while they're in the money.
oh yeah, I opened them when NVIDIA was like 175.
Wow. Jeez. Cowboy, like mini TJ.
But it's like dude, it's on NVIDIA, man. It's just like if you're gonna give me NVIDIA and my cost basis
Yeah.
is like 170, 160, like I'll take that, So we'll see what happens. I don't know.
Yeah, you got a long time. So
I think that there's nothing that NVIDIA can say or Jensen can say or NVIDIA does that will shift the market. Like the hard thing is, I don't think like they'll raise. I think that few doubt that, but again, like to your point, Sam, how much do they have to do that to get some upside? And the problem is, like, even if they do, then the market is going to think, okay, yeah, AI is going to kill everything, and it'll sell off anyway. Versus, like, if they miss, obviously that's not good, but then that'll feed the other side of the narrative. The AI is just a bubble. So, like, these two narratives, it's not the same people like saying both are true, because that would be nonsensical, because they both can't be true. Now, there can be some truth to each, but it's just kind of a tough space. So, I'm long NVIDIA. It deserves to be at $250. And I think it'll get there at some point. But yeah, I sleep like a baby holding it, so I'm not really concerned.
Yeah.
I see some people like banking on him destroying the nerve. I'm like, dude, Jensen has already said everything he needs to say. They've already done everything they need to do, and all the stuff that we've heard this earnings indicates this is not just a bubble. So
yeah, it has been like an option selling event every quarter with NVIDIA. So would it be surprised if it ends up flat after earnings? Because like everyone, that the seller is going to win no matter what when it comes to that. That it's always been that case. Even last quarter, technically, it was an option seller event. Like if you sold puts, you got out and you won. If you sold calls, you could have waited and then you won, right? But the people who lost last quarter were the ones who had calls into earnings, or long calls or long puts into earnings. Those are the people that lost. And if you were long calls in last earnings, like unless you closed in the first like 10 minutes, you got decimated, right? So it's going to be an option seller event most likely. And I wouldn't be surprised if, things end up flat afterwards, regardless what happens. We also have State of the Union tonight. So we'll see what happens with that one.
Well, some of the some of the data center names were pumping because apparently Trump's going to be talking about he's going to be talking about data centers
and energy.
I don't think Nebius is going to pump on that, but probably Iron is going to pump on that, and CoreWeave for sure.
I think Nebius might, just because we saw it fall when CoreWeave and Blue Owl and that whole funding had nothing to do with Nebius, and 60% of their funding is from their actual customers anyway. And it crashed. I mean, it didn't crash, but it went down like 9-10%. Before I forget, I don't want to forget this. Can you throw up the Ori Decal 5 donation? And I want to hit this question real quick. When IGV, this is SaaS ETF, is rising nicely today and Palantir is red, does that mean Palantir's decline is setting off a red flag? I mean, like I saw one person that was shorting it just because of relative weakness. And oftentimes it does, when you stick out like that, when the sector is doing really well, there are people that take opportunity on that. I think part of what's happening is it's Anthropic. It's kind of funny, but Anthropic today rolled out some enterprise feature tools, which oddly enough, a lot of people that looked at that, there's a post. Let me just throw this up so you guys can see it. A couple of posts. So first, Anthropic rolled out new enterprise features on Claude. I couldn't find the actual announcement right quick, but I wanted to throw it up just so you guys could pull it up yourself. A little bit more by Wall Street Engine, rolling out a new Claude co-work feature for enterprise teams in areas like HR, investment, and banking design, including easier plugin creation and so forth, which it doesn't really have that much to do with Palantir, but sometimes you can get caught up in it. And Deutsche Bank said, yeah, nah, SaaS is not getting killed, essentially. So the other part of this too is, of course, Anthropic's getting some pushback from the Department of War regarding them not opening up that tool. And so I think that there is some question mark because Palantir doesn't have their own LLM. They've always said it's a commodity and said you can bring your own LLMs, and they recommend a KLM solution between multiple just so that you don't have the hallucination problem. But Claude does really good work. And so if suddenly Claude starts restricting it, like if company after company follows that example and is able to do that, all of a sudden Palantir doesn't operate quite as well just because you have more limited options. And so that could be some reason for this. I don't really think, I don't know how that'll be resolved. They're been given a day until Friday for Anthropic to comply, but we'll see what happens there. Any thoughts on that specifically from you, Sam?
I mean, I think the market is just second guessing whether they're going to continue to give a massive premium for a lot of companies, right? So even after this 30% pullback in Palantir, like it's no secret, it's still expensive, phenomenal company, right? But they're probably just, even CrowdStrike, who's have a premium valuation, was flat to down today. Cloudflare, I don't know if Cloudflare bounced today too much, but that's always been an expensive software company and also probably a much stronger mode. You think about edge computing.
Yes.
And you would think that would be up because DigitalOcean was up a lot after the earnings today too, since that's like kind of a baby. Yeah. So yeah, I think that's just what it really comes to question here is like, are we like, do these really justify its premium valuation anymore? And honestly, a lot of software stocks can be flat here and they'd still be expensive, which is crazy to think about because it's not the same world we were playing in before. But I mean, if you're playing the chart, probably seems like an opportunity for Palantir, but I don't understand. I guess I don't understand why people would think that a stock's going to go back to a price because it was there before when the market conditions have obviously changed.
Yeah.
So they have changed. It's no secret they've changed. So you can't expect one single stock to go back to all-time highs in a certain environment when that environment has changed and the stock is very expensive. So I think that's except Nebius. Yeah. I mean, those things are trading off of their projected ARR at the end of the year, right?
Yeah.
So that's always been the case for those, but they will have massive volatility. But also, those are not software companies. Those are part of the supply chain for AI, right? So that's kind of different. It's kind of different, right? So, but yeah, I mean, if you base it off today's fundamentals, they are extremely expensive, like outrageously over 100 times price to sales, but they are growing at 500+%. So a little bit different for that one.
Yeah. You have any thoughts on SaaS? Why we or whether we bottomed or not, or is this just a local bottom, dead cat bounce, Tevis or Sam?
Oh, good. Go ahead.
Go ahead, Sam.
Sam.
Actually, I got to go in a couple minutes, but I don't know if it's the bottom. The Qs are looking a lot better from a technical perspective because we've reclaimed the 21 EMA. Which is good news to see on the Qs. The 50 EMA, I believe, is also, maybe that's above us. I haven't checked exactly. But structurally, the Qs are looking terrible still. And yesterday, we saw something a little bit different that we haven't seen this entire sell-off. We saw a continued sell-off of financials. And financials are a very strong indicator in terms of the health of the economy because those are the big banks, right? And KRE sold as well, which has arguably been leading year to date from the entire market. So if you have the financiers or the backing of financiers taking a step back because of private credit concerns, kind of tells you what's actually what concern there is under the hood with a lot of software companies that trade on a lot of debt, right? So that is the issue here. And yes, these data center companies have a lot of debt. They take out a lot of debt, but they're super volatile. Nebius was $70 just a few weeks ago. Right. So you can't really say this is going to stay. You don't know.
I barely missed out on that. I sold cash ticker puts for 70, and I think it was Friday that the thing just rocked. I'm like, oh, so I bought it anyway. But yeah, that would have been a great entry.
I think you'll get another opportunity. I don't. I'd be surprised if that was the bottom. I would
Yeah.
be. I don't know if this sell-off is done, but I think the magnitude might take a breather for a minute, right? But that doesn't mean that certain companies could continue to slide down. But you could 2 days from now, Friday, like Nibs could be at $70. Like, who the hell knows, man? Like, who knows about this stuff? Who would have thought we'd be back above $100?
Yeah.
It's who would have thought. But
Tevis thought, but
yeah.
Other than that. Sam, you said that you had to go right quick.
Yeah,
I
I
do want
gotta
to
go,
get your
man.
thoughts, Tevis, but is there anything else that you wanted to cover or talk about before you need to go?
No, I appreciate you guys having me here. Enjoyed talking to you guys. Tavis, was good seeing you the other Sunday. Um, I want to go to the Texas one when Ahmed eventually does do the Dallas one. You live in Houston though, so I'm not sure if.
He's going to come to Houston, not
Oh,
Dallas.
he's going to see. Okay. I'm down to go to Houston either way. Yeah.
I don't know for sure, but there's a ton of us in Houston. So Matt Money's here too, big pull. So
that's good. That's good. Yeah, it was cool seeing Matt too. It was cool seeing you guys. Obviously going to be in the LA one if you guys are going to be going to that one. But yeah, right on. Whatever storm that we're going to be hitting, I think we'll all still be around. Just be careful with. And I'm not talking to you guys. I'm just talking to the audience. Just be careful playing with margin and playing with calls and stuff unless you know what you're doing. I'd imagine Tevis probably has no idea what he's doing, but he's still making it anyway.
Hearts on a dartboard, man.
Yeah, no idea what he's doing. No, I'm just kidding around. But yeah, guys, it was good talking to you. And congratulations again, Roy. That was a very nice pick. And I think you're benefiting pretty well from that one. So that's good.
It's making my portfolio basically flat on the year, which is pretty good considering the other names I'm in. So
it's pretty good considering how a lot of people are performing too. So yeah. All right, guys, take care.
Take care,
Thanks,
Sam.
Yeah.
Later.
All right, for you, Tevis, SaaS. Do you think that there's anything? Do you think that this is just a local reversal off the local bottom? There's further downside. Are you any changes as far as some of the SaaS names that we're looking at?
Yeah, I just want to throw this up, and this post caught a little bit of steam. I said, look, Anthropic dropped some security tools immediately. CrowdStrike fell 19% in 48 hours. Anthropic dropped, their ability to do COBOL modernization. IBM dropped 11% yesterday. And meanwhile, the market is saying AI is a bubble and, we should sell AI names. But then also the market is nuking all the incumbents because of AI. And so it's just this point of confusion, the market needs to pick a lane essentially on where they stand with AI. And I know some people here were like saying, well, actually it makes sense, blah, blah, blah. But like, to me, it doesn't. Because to me, as I've been thinking about it more and more, I think the sort of total addressable market or the potential is unknown from the market's perspective. I think we are a little bit more bullish than the rest of the market is on AI, and especially me this week from like having used it firsthand extensively. Definitely more bullish than I was, 2 weeks ago. I think, however, if I'm trying to channel, these fund managers and institutions and whatnot, like if I have a SaaS name, I think I responded this to somebody, like if I have a SaaS name and there's a non-zero chance that my SaaS name gets absolutely, redundant as a result of AI, well, nobody's putting a gun to my head to invest in that SaaS name. I might as well just take my money out of there and wait till the dust settles and see if mine's going to be around or if mine is not going to be around, depending on how this AI story develops. Right? Because like some SaaS names are going to be hit way more than others. Some might not be around. Some definitely will. They'll make it through and are unfairly sold off as a result. But like, do you really want to play that game where you're just gambling with your portfolio around who's going to make it and who's not going to make it based on what technology is released tomorrow? You're seeing AI, companies like Anthropic and others release new features every single day. Earlier today, Anthropic released, that they're now doing plugins for HR. They're now doing plugins for, wealth management and so on and so forth. I'm seeing people use it more and more. So like, the use cases are actually incredible and expanding ever more. 12 months, like this is exponential, man. In 12 months, it's going to be way bigger. So is SaaS dead? I mean, I don't think it's dead today, but I think that the market is not selling them off because they're dead today. They're selling them off because they could be dead a year from now or 2 years from now. And we don't know who's going to be dead and who's going to be surviving.
This could also be one of the reasons why we've seen a bit of a reversal. The COO of OpenAI said, we have not really seen AI penetrate enterprise business processes. Now, I think that it's a weird statement and just factually wrong. And the only reason why I caught this is Chad Walquist, who is one of the engineers at Palantir. Like he said, yeah, no. and frankly, like it's wrong. It's not just Palantir that's been involved, but a lot of others as well. Now, that doesn't mean that every single, like Salesforce, for instance, has launched Agentforce. They're trying to get in. NVIDIA is, of course, backing them, trying to make that work because, hey, it's great for NVIDIA if it does. It's not really made the inroads that a lot of people expected. And there's been a lot of failures along this line. But that doesn't mean that there's like no demonstrable changes or shifts or impact. Palantir is one of a number of names actually that have to. But regardless, like that might give that enough confidence between like Deutsche Bank's comments, between, you know, some people mentioned just ETFs and everything. Maybe it is a bottom. But the other part, like going back to institutions, like I have a hard time believing institutions would just based on this or based on, you know, what some other people saw with Anthropic. And there's always people that are in this space and in the industry giving their opinion. But I have a hard time believing that they would sell yesterday meaningfully and they'd be like, oh, actually, never mind. Let me rebuy. That's retail. That's not institutions. I don't think. I could be wrong.
It could definitely be retail. I don't know. I don't know who's more emotional at this point, retail or institutions, because they're both pretty freaking emotional to me. We've seen like a single Substack article comes out and so many names start selling off. I don't know if you saw this or not, but yeah, there was like an article that came out and immediately like 5 names started selling off. It's like, dude, what the heck is going on? So yeah. Again, I think it's too early to tell right now, but yeah, I think we need to give it some more cycles to see how it is actually going to be affecting the financials of these companies.
Yeah, for sure. All right. Do we have any other topics, Tevis, or are we straight into Q&A a little bit earlier?
No, I think straight into Q&A a little bit earlier. I did release my little app today. I don't know if you had a chance to take a look at it.
Not to look at it. Actually, I haven't looked at it since you implemented dark mode.
Yeah, well, there's a couple things that changed. Well, actually, let me show you this.
Yeah,
because you might like this. So, all right, and I made a video. Actually, that video is performing a little bit better than I thought it was going to be performing. So, okay, so this is the site. If I go to retail and if I go to calendar, look at that, Roy. Our videos are up here. Who's that guy?
Could be anybody. It looks like somebody that works for the Catholic Church.
Yeah, exactly. So you're here somewhere. There you are. So we now have a little calendar of who in the community has posted in the last like 48 hours. And we can change, you know, what this list is, but that's kind of cool. Because I always feel like I miss people's content, but that's just like one little piece. I don't know, man. It's been cool building this thing. It's sort of humbled me after working in tech for such a while that I actually don't know as much as I might think I know about the tactical pieces around system architecture in general. And that's really exciting. I was telling one of my work colleagues, I showed it to them and I was like, I feel like I've learned more about the actual tech piece in 1 week than I have in the last like 2 years.
Yeah. And you're, man, what you've created is pretty impressive. Like even knowing Claude was there, you're basically managing Claude, but still like it's pretty cool. I hope at some point I'll have time to play around with it much. what I create is not going to be nearly as comprehensive as that, but I'd like to understand a little bit better. So
yeah, it's going to be like, it's going to have bugs, and it's going to sometimes freeze, and it's going to, have its own things. It's still like, bootstrapped, so to speak. But like right now, I'm like, I don't know if I should add more to it, or just keep it as is. Because I'm worried that like the more I add, the more overhead this is going to have. Because like this was like a 7-day project, and like I mentioned in my video earlier today, I was like, look, the majority of the features were done by day 2. The rest of the 5 days was just like optimization, security, making sure everything loads on time, everything doesn't, have bugs, doesn't freeze, so on and so forth. So it took about 7 days. So 7 days. On the 8th day, we published.
yeah, 7 days is a good time period. Somebody quite well known did a lot in 6 days, rested on the 7th.
Mine is a little bit more complicated than what he did, but on the 8th day we rest.
There you go. 7th is no God. It took him 8 days instead of 7.
Yes, exactly. It's just HTML, guys.
Yeah.
Very cool. So yeah, let's go to questions.
Yeah. Yeah, I failed to mention this in the beginning. If you guys are new with this, we do a Q&A period, which is here. You can throw up anything related to stocks and market. Of course, our Friday show, a little bit more open-ended. You can ask non-stock stuff if you want to. But yeah, go ahead and put those questions in, whether it's something we talked about or not.
What's your average ROI of AIR?
19 and some change. It's like 1903 or 1908 or something.
Nice.
Yeah.
So you're officially like a 2x right now.
Yes.
Sam off. Damn it. Sam's not here anymore.
Yeah, Rubric is one that he's been on for a while, and it's been a while since I've looked in it. It's in the cybersecurity space, and it's not a space that I know deeply, and it's always kept me from getting in. Plus, a lot of them have been trading at a premium. Rubric has collapsed as far as price, but I've not kept up with it. There's others that have as well, like Century One and stuff. But yeah, I don't know really enough to answer that question. So
me neither. I don't even know what Rubric does. Do you think PayPal? What do you think PayPal sells out for?
Probably around $65 a share. I think that multiple offers, multiple bids get done, and that bids it up to 65. I think it would take multiple credible offers for the whole thing, or at least most of it, to see $70 a share or higher. Could be wrong. And again, like I said at the beginning of this, I don't have a position. I don't have a dog in the fight. I'm not going to be mad if it's, like $90 a share. Like PayPal shareholders, except for the newcomers, the rest of you guys have had so much pain and suffering in that. I hope you make out very well.
Yeah. I mean, maybe we'll just get this out of the way as well. Are you mad that you sold PayPal at the bottom?
No, more than half of the money. I didn't sell at the bottom anyway. I got at 45. It went lower. And I ended up buying air test systems, mostly. Like it was more than half of my money. Look up the ticker if you're not familiar with it, AEHR. It's done okay. Now, I did also buy some NVDA, which is up less than what PayPal would be from the price that I sold PayPal at. And I also bought some VG calls, which are up less than what PayPal would be. But overall, I'm still up higher than that. I'd be a little upset at myself, like if they get $90, which I don't think that there's any way that they can for the buyout. And I exited, a little bit too early. But honestly, like not too mad, just because like if the thesis is broken for me, I'm going to get out. Doesn't mean that there's not upside. Like it's even when I sold, I was like, it's undervalued. It shouldn't be trading at this value, but the thesis is broken.
Okay. Next question. How is that we as buyers for the chance to bid it up now before the actual offer dropped?
I mean, like that's every buyout. So there's always, not always, almost always rumors, especially when you're talking about a business this size. People talk. And when you have multiple people kicking the tires, there's a lot of potentiality for those things to be leaked, including some benefit, especially for PayPal, to leak that one way or another. There's a lot of channels of ways that you can do that. So it's very common. And again, just because there's rumors doesn't mean that there's actually going to be a buyout. It could be that the board of directors are like, no, you got to give us $125 a share or else no deal. They're not getting that. And in which case, it just really comes down to, I think, it really comes down to two things. First, regulators. Regulators might say no to parts of the deal. I don't think it's as big of an issue as it was under the prior administration, but it might be that Stripe can't acquire all of PayPal because of regulators, and so it takes a little while to figure out whether Braintree goes by themselves, gets sold to somebody else, or what have you. And then, of course, the second is what the board of directors want. Now, there's always a premium over the price, but again, 30 to 50% is the typical premium for fintech. Over when rumors began, which it was trading under $40 a share at that point. So we'll see.
Yeah, that's going to be really interesting. But then again, I mean, like you have the Paramount and Netflix, bid going on, and that's been quite bid up. There was also news around that too today.
Yeah. Well, and like that's case in point. Like when there are buyout rumors, oftentimes those are floated out there intentionally to be like, hey, these guys are kind of serious. Any competitors also want in on this action, which is really good for the company that's trying to be acquired. So we have not seen a second bidder, or we don't know of a second bidder for the whole thing. And there's just not that many candidates. The only two that come to my mind is X and JP Morgan Chase. Other than that, there's not enough size.
Amazon.
I don't think Amazon can acquire all of them. Regulators have really stepped in and stopped that in the past. I think the payment service processing, yes. And then Amazon would also be impacted because kind of the same way that SoFi was when they acquired Galileo Technisys, where they're like, hey, we're going to acquire this. It's great for us. It would be for Amazon. But the problem is, would you want to be a competitor of Amazon being reliant on their payment technology? Not really. So,
yeah, but I mean, anybody who is seriously going after PayPal is going to have regulatory questions to answer. So it's not going to be specific to any one bidder, because in order for them to be big enough to be able to acquire PayPal in the first place, they need to have they're going to be big enough for a regulator to look at.
Yeah.
Okay. Does this affect Shift4? Where's Tanner when you need him?
I mean, yeah, like Shift4, I think any competitor to Stripe or PayPal, like a merger, an acquisition, it's not great for them, especially because Stripe is incredibly well led. And as a private company, they'll be able to do what they need to do to be able to right size and get PayPal streamlined. I think faster than what was happening under Alice Chris. Like things were happening slowly. So it's not great for Shift4. It doesn't mean that they're dead in the water. I think Shift4 is a good company with really good management leadership, maybe excellent leadership. So, yeah.
Do you think a legacy insurance company buys Lemonade? I don't know. They're small. I mean, they're under $4 billion. I think it's possible. Yeah, I'm not exactly sure. I'm not sure. Maybe they're quite small, but I think they would need to hit that profitability first, and then it's. I don't think it would happen this year.
Yeah.
What if they just merge and Stripe goes public via the merger? Is that dumb?
I don't think they really want to be public. I think they will go if they acquire PayPal, just because they'll have to do something for that. But I mean, like it's if they wanted to go public, this would be an avenue to do that. I don't know that it's dumb necessarily.
PayPal is the world's most expensive SPAC.
Yeah, or Stripe. Yeah, there'd be a lot of people that would be mad too, just because, I mean, like, honestly, it's institutions that benefit the most from IPOs, well, and the company themselves. But yeah, that would be unexpected if they did that. But yeah, honestly, like PayPal and Stripe together, that's a pretty good combo.
Yeah. Any good chance? When's the last time you had the chance to buy it prior to the actual offer?
I mean, like you never know, but usually this takes months to play out. Now, like case in point, we've seen that with Netflix
Yeah.
and the Warner Brothers Discovery. So, yeah.
Could you see Nebius below the $50 mark? If
I
it was
mean,
going to go, it would have gone in December or even in January.
like the hard thing about it can go lower and it's very volatile, but inference is like when you're seeing things about Anthropic and it's freaking everybody out. You know what they need a lot of if Anthropic is going to continue to accelerate ridiculously? Inference. And that really benefits Nebius and all the others as well. It's not a winner take all space at all, multiple winners. So it's really hard to see anything come out and just tank them below $50. Something would have to be really wrong.
Yeah. I don't see that happening unless like the entire market as a whole starts tanking.
Yeah.
What about near database SaaS becoming stronger with AI? Is that thesis logical or flawed? Yeah, I mean, like it's going to depend on the speed at which SaaS companies adopt AI into their processes, and that's going to be a cherry pick thing. Like some will move faster than others, and some will fall behind, and some will actually gain market share as a result of them implementing AI. Right now, we don't know because it's too early in the game, and yeah, so that's why I'm saying give it more time.
Yeah, it's there's a lot that's unknown, and I've seen credible people that are in the space and industry that I really respect on opposite sides of this. But yeah, I think that makes sense to me. But yeah, it's going to take a while, I think, for the dust to settle. That's why I'm skeptical that this is actually the bottom on SaaS. We might have a little bit more pain.
Yeah. Oh, nice. I watched your video on your tool. I like the retail investor video section you showed. How do you determine who gets on it? I just made a list of people I like. And if you want me to add more people, then submit it in the feedback form. But that's pretty much it. The benefit of building the tool is I get to determine what goes in it. Why is SoFi up after hours? Because Kramer was pumping it.
Mm-hmm.
Any good chance of HIMS getting a buyout? Roy, what do you think?
That's interesting. I mean, the market cap's not too sizable. I think right now, probably not. Like one of the things that's I've not liked about HIMS recently. I don't mind the acquisitions. I think Zava makes sense. Maybe all the acquisitions make sense as well. But it feels like they brought on and bought too many people and bought too many companies all at once for that to actually be digested by their ecosystem under the HIMS label. I mean, like they're not going to relabel everything HIMS either. So it's kind of there's a danger that HIMS. Well, right now I think it's probably a little bit of a mess anyway, especially with the legal stuff. Like I don't think as long as the lawsuit overhead is there, they're not going to get bought out just because there's risk for that. When that's cleared up, if they've been able to digest these acquisitions, that some of the people that they brought on, like Noah Ashwani, are producing something that makes sense for the ecosystem, maybe then, but it'll probably be at a higher price.
I do not think they're going to get bought out. I think that I don't think, first of all, Andrew Dudham's going to sell. But even barring that, I think the market sees HIMS as more of a marketing company without any like proprietary type of value proposition. I'm just saying that's how the market would see it. And I think the lawsuits are definitely an overhang. I think you would always be buying something that you wouldn't be able to sleep easy at night because you're waiting for the other shoe to drop. If HIMS had like some type of patent or some thing that set them apart, for example, then sure, you could buy them. But right now, from a acquisition perspective, I don't know that you can make a case for HIMS over Row over any of these other similar types of offerings. Now, it's different for public markets, right? Because there's like, oh, what's the execution and what's their roadmap or where do they want to go? But if you're acquiring them, what are you acquiring? You're acquiring, what they currently have essentially, and what is the mousetrap that they have. And I don't think that HIMS has something that an acquirer would look specifically for. Because you don't want to be somebody, acquiring HIMS for a premium, and then all of a sudden they get into another lawsuit or something like that, and you're now left holding the bag.
Mm-hmm.
Tavis, those who followed you bought HIMS. What do you say to them? Okay, I would say, I don't know if I want to take any type of like accountability for other people's actions. Like I wasn't standing over their shoulders pressing the buy button. Like I made money on HIMS because I was selling along the way, and overall it turned out to be a profitable investment. But I definitely lost money on the last couple of batches of HIMS. Personally, lost money on that. So it's not like I'm shilling you guys something that I'm not personally in, and it's not like I'm shilling you guys anything at all. Like we literally say, yeah, exactly. We literally say this is not financial advice every single podcast that we cover. So I'm just doing the homework for myself and sharing that online. I mean, if you want to buy it on that, it's like saying like, oh, what do I say to the people, who bought Nebius or who bought SoFi or who bought, any of these other plays that ended up working out. But I'm not getting anybody asking me about those. You guys ask me about HIMS instead. So it's just like, you can't have it both ways, man. Like if you're investing your hard-earned money based on a dude on the internet, and you lose that money, then I think the first place you got to look is yourself. Now I'm saying that wholeheartedly. Like I lost money on HIMS over my last batch. Roy lost money on HIMS over his last batch, but like we also made money on HIMS along the way, and we made money on other names as well. And this entire show is entertainment more than anything else. So, sorry you lost money. Suck it up. Be an adult.
Well, I don't know that they are speaking of themselves, but maybe that was a hypothetical. We don't know that for sure. But yeah, like it's like just to reiterate two things. Like if you did exactly what Tevis and I did, which we do not recommend, we're not telling people to do. Your own situation. You would have made a lot of money on HIMS. If you've been listening to us over the last 6 months, we've been talking about HIMS and the thesis weakening, a lot of yellow flags, a lot of issues. And then we also shared when we got out and when we sold and what basically was a catalyst for that. So the last thing I'll say is this type of episode and show, stuff on X, other people that you might listen to, that's a great starting point for companies that you've not heard of, companies that you kind of lost track of and stuff. It's so important, though, to do your own due diligence. Because let me give you an example. Airtest Systems, which has done insanely well. Let's say that you followed me, into that trade at like 20, 21 bucks or whatever. I saw June say that she bought it like 8 or something, that's incredible. You were in before me, I guess. Or maybe it was a cash secured put, and you're saying net average, whatever it is. But like if you didn't do your own due diligence, it's very volatile. It moves immensely. It's not been all up since it has been like pretty much this year, but I was buying like July or August. So I've been in it a while, and it's been ups and downs. You can look at that. And if you don't have your own due diligence, when a stock is plummeting, you're like, oh no, I better get out. And then even though you got in at the same entry, you're in the same name as well, you've never actually built the conviction. You don't know what you own. You're not going to make it. So do your own due diligence. Make sure you're comfortable with any investments that you make. You know your situation better. And lastly, it's okay to take gains, guys. I think that this market's a good reminder. Like, even if you're like, hey, it's still undervalued, there's more upside, you're not going to go bankrupt taking gains along the way. You might make a little bit less money, but that's why I sold covered calls at 50 on Airtest Systems for 25% of my position now. So got to take gains. Man, June got in at $8. That's killer.
Crazy.
Yeah,
That's wild.
congrats.
All right. Let's see. Are you selling calls on Nebius? No, I'm too scared to sell calls on Nebius. I would have probably made a lot more money if I did, but I'm not. I just like the name too much, and yeah.
I did. Just the weekly premiums are really good. I sold 120, so it's pocket change, but it's a new position for me. And like right now, there's so many ridiculously good deals out there. I'm okay with like a quick turnaround. It's kind of like what you did with NVIDIA in the past. I do want to be in the name long term, but yeah, if it sells at $120, there's still a lot of deals in the market. I'm okay with that. So, but I do think that there's higher upside. By the way, can you throw up Terry Fake email 1824 at 732? I want to say the other side of this too. Congrats. You made 100K on air. Thank yourself and send a check to yourself. You were the one that pulled the trigger. You're the one that made the money. The gains are all yours. But I appreciate the shout out. And congrats on that. That's very nice gains.
We talked about PayPal pretty extensively throughout the show, so definitely rewind and check it out.
Yeah, 20-minute mark.
Yeah. Any new stocks that are catching your eye to start doing a deep dive on?
I'll share that there was one that I ended up getting out of just because there's some insider stuff that I didn't like. The drone stock that I was looking at that I did the investigate. It was only 100 shares. It's $100,000 was Mob. It's an Israeli company that does cybersecurity for drones. There's some interesting stuff as far as regulators that in the United States, but I don't know. Looking into it, it raised my eyebrows. It's interesting, but I'm like, I don't know if I want to be in this at this time. Let me buy some more of these screaming buys. So mostly, like, there's so many deals out there, and I'm almost out of cash. Like I have, I think, under $1,000 that's unallocated in my portfolio. So I'm not really looking right now, but yeah.
Well, what about Figure? I mean, Figure just breached under $30 a share.
Well, I bought some. Yeah. I have Figure. I had some cash secured puts that filled at 30. I had some that I bought just over 30 as well. But I've been doing due diligence in the company since like when they IPO'd and actually just before. They're really interesting. Not everything is perfect there. They actually had like an interesting move as far as having not just tokenizing their own shares, but instead having their shares trade natively on their own Providence blockchain. It's not all their shares, it's just a chunk, which you can exchange on a one-for-one basis. But being a first mover like that, not everybody likes it. It's one that's like, let me pull this up. Like, this is crazy. I want to show you the short interest. I don't know if you saw this, Tevis. Do you know how much their float is shorted?
No.
Okay. This is going to shock you because I knew it was shorted. I just didn't know it was shorted this much. Now, the caveat is the IPO lockup period does end in early March.
50%? Jeez.
Yeah, 50%, which is insane. This is a profitable business that, like, even if all they ever did was HELOCs, they're killing it. They're making money. They're doing great. There's a lot more. Like, this is a company that it's kind of unique to me in like two ways. One is there's 3x SoFi people that are in the C-suite. The other is there's a lot of companies that understand crypto very well. There's a lot of companies that understand traditional finance very well. There are very few that understand both very well. Figure is one of those. So yeah, I ended up buying in. I was like, I'm not going to risk waiting on cash equivalents. But my thesis is not a short squeeze at all. But this also explains why the volatility is just ridiculous. So yeah, I'm working on a collab piece on Figure. There may be more coming as well, and I hope to do a video relatively soon on them if I get time. But right now, like, I'm trying to hold off on doing too many new things until after the 12th.
Yeah, that could be interesting. You still need to do the air test systems.
Yeah,
Stock tank.
It'll have to wait till after the 12th. That's when I defend my dissertation. So I gotta get that done. I want to knock it out of the park and defend successfully and just be done. It's been a long time in coming. So yeah.
Let's see here. Tevis, now that you coded with Claude and experienced the capabilities firsthand, do you think it has influenced your opinion on the markets, narratives around AI, and its potential disruption? Yes, I have said multiple times that after using it firsthand, I feel underinvested. And I honestly feel, man, like I was telling this to a coworker, I was like, I genuinely feel like this next job that I'm going into right now is going to be like the last time I'm employed for somebody else. Because I think between YouTube and also the possibilities out there for you to build your own thing, it's going to be so much more feasible for you just not to have to work at a large corp. And I mean, I think a lot of people are going to come to that conclusion as they use these tools and as they realize how accessible everything is, from the coding all the way down to like the marketing and SEO and everything else. It's all out of the box. Then I think we're going to get a brain drain from large corporations, from Fortune 500 companies to just more solopreneurs, because it's going to be so accessible to do that. So yeah, we'll see what that ends up being, but tools are only going to get better. Like today is the worst it's ever going to be.
Yeah. Kind of a piggyback question on that. If you were able to invest in either OpenAI or Anthropic and you had to pick one, which would you pick?
Anthropic, 1,000%. Yeah. Like I would invest a lot of money in Anthropic.
Maybe like 6 months ago, we were talking with Tanner about OpenAI, and he was like, "Hey, I'd love to invest in it." And like, none of us we weren't bearish on OpenAI, but neither of us were that excited. I had mentioned, I think you might have said something similar, like Anthropic's pretty interesting. Like I liked how they positioned. Initially, I didn't like what they did back in 2023, but I didn't understand it. Late 2024, early 2025, I'm like, they've built themselves quite a niche, and now the market is actually realizing it. So I think over realizing it, where it's like Anthropic is kind of like Amazon, where if Amazon enters a space, whatever's in that space just tanks, even though most of the time it's irrational, not all the time. Anthropic's kind of like that right now, which is funny.
Yeah. I would absolutely get into Anthropic in a big way if I could.
Same.
So let's see. I don't know when the State of the Union is. The people asking. Is it
9? I think it's 7. Let me see. Let me pull it up.
Yeah, what's up with SoFi after hours? Kramer was just pumping it.
Yeah.
It's at 9 p.m. apparently, 9 Eastern.
Oh wow, that's later than I remember it being. But yeah, I saw a question like what stocks might pump from that. Like usually for Trump, it's energy stocks, but there's also been a mention of the data center plays. So we could see that. Anything that might have tariff exposure, like you could see a negative, depending on the saber rattling. Although the tariffs that were put out there under that exception for 180 days is just 10% worldwide, not 15%. So maybe nothing meaningful in that. But
dude, it's crazy. I don't even know where this year went, man. I remember the last State of the Union like it was yesterday.
Yeah.
Like, what is going on? He called out that kid with cancer, and then half the aisle didn't stand up, and I was like furious about that. And then it's like you blink and it's been a year.
Yeah. Mike MC McDole said at 741 Trump accounts will be mentioned. Honestly, there's a pretty good chance that they mentioned that. That's been something that they're very proud about. Of course, Robinhood has had some mentions in the past, also SoFi. So you may even see like a State of the Union mention of like these companies or CEOs. The Genius Act may be mentioned as something that passed already, and the Clarity Act as well in crypto. Those are other possibilities too. So they're very focused on the market, maybe probably more so than they should be, honestly. But yeah.
Okay. Let's see. Could a hedge fund just take PayPal private? I mean, PayPal could take PayPal private.
Yeah.
You know? Roy, a question on Figure. Do you crypto underperforming could prove out a headwind for? Do you think crypto underperforming could be a headwind for earnings this quarter in mortgage and HELOCs?
It's a headwind on the stock. It's not really a headwind for the underlying business. The market lumps them in a crypto bucket. And actually, that was my thesis with them when they were pumping, and even before. Like I never got in. I did write some cash secured puts. They never filled. I now am a shareholder. But I thought, okay, if we get a crypto winter, is this a name that's going to be lumped wrongfully, even though it is a crypto company, in as if it's a negative, the price of Ethereum and Bitcoin and so forth? Like the misunderstanding is they have their own blockchain, they have their own stablecoin, the first SEC registered as well. They're tied to real world assets. Now, some of the lending, you are able to lend against some of your crypto positions. So maybe there's a tiny bit of weakness for them, just because some that have loans, it's backed by crypto. But I mean, I don't think that there's a high risk of default or anything like that. So I think it's such a small headwind. It's not worth even mentioning, especially where you see how far that they've fallen. They shouldn't have been trading in the 70s. I think they were my number 2 pick entering this year. Airtest Systems was number 1. Figure was number 2, and I didn't own them beyond SoFi, which I'm obviously very bullish on. And but as far as the stock giveaway, and they astonished me because I was like, this shouldn't be trading at $70 a share. But long term, I really like them. I think that what they've done with HELOCs is very repeatable. And again, it's platform revenue, so it's asset light. Not all of it. I mean, they do their own lending too. But Mark Cagney, like I like him as a creator and startup guy. I like that they have Tannenbaum actually as a CEO because of some of the stuff that happened when Cagney was ousted from SoFi. You need to look into that, by the way, before you jump in the name. Make sure that you're okay with Cagney being there. I personally am. I think people can change. And again, he's not the CEO. So you're muted.
Did you see how Jane Street got caught insider trading? And after they got caught, they stopped shorting crypto at 10 a.m. every day.
I didn't.
Let's see if anyone gets arrested for that one. Holding my breath over here.
If it's real, I hope so. But yeah, this isn't the Stop Everything Crypto organization.
It's not gonna happen. Tevis, you've pushed me to continue my AI journey. Stop vibe coding. I'm gonna try Cursor first, but that video you did the other day got me motivated. Thanks, B-dubs. Appreciate that. Miss Hood is screaming buy here. I've been buying, love the company. Yes.
I think actually no. I think it's a buy, but not a screaming one. We are, as Tom Lee characterized it this week, a mini crypto winter. I think we're in crypto winter. I think it's hard to dispute and doubt that. Maybe it's over before a typical crypto winter. I think winters will tend to get more shallow as adoption and as regulation gets better as far as time period. But if crypto winter persists a while longer, even though it's sold off more than it should be, I think it's a buy. If I didn't have it as my largest position, I would already been buying. For me, a screaming buy is, and I hope it doesn't fall this far because it's my number 2 position now, in the 40s. Like if it falls, or even like $50 a share, at that point, I'll be buying some leaps. I haven't owned options on Robinhood in a while, but it should not get that far, barring some like meltdown in the macro, big recession, something like that. At that point, it's a screaming ridiculous buy, and I can't ignore it any longer.
Yeah. Yes. All right, let's see. Yeah, I mean, Josh, SoFi moved 2% today, and it feels like a 10% move.
Yeah, it's been down like 9 or 10 weeks in a row. It's like, could we have a bounce, please? The RSI, well, now it's no longer the case because it's up slightly, but RSI for the weekly was at 32 yesterday, which like you look historically at RSI on SoFi, and actually most names anyway, when they get oversold, they tend to bounce, especially in a bull market, even if it's a dead cat bounce. And this is not a dead business. Like it's an incredible business, just in a tough macro.
Yeah. Since people are asking, how do I download paper? It's literally just the website, guys. You just go to paperpanda.io and that's it. That's all you need to do, just like any other website. Hood is got into the UK 1 trillion ISA market this February. They're taking market share from eToro and such, like bullish or nominal.
Yeah, I mean, like international expansion is part of my thesis for this year. Like even when we entered the year, I'm like, there's upside here as long as there's no crypto winter or something. But we're in crypto winter, so. But the ISAs, they had SIPs I think already, but the ISAs makes the launch meaningful and credible. They mentioned in the last earnings call that as they do more and more launches, that the cadence will actually speed up. That was I got to ask a question, the shareholder. Alongside the analyst, they call us a retail analyst. So, but I asked specifically about that, and there's a lot of international launches that are coming. So we'll have to see how well it does. That's really an unknown. It's a very different environment in the UK. We'll also have to see if they launch like the predictions market internationally. Right now, they're not exposed internationally, even though Kalshi and of course others are.
UK Hood stocks are tokenized or normal?
Normal. It's tokenized just in the EU.
AMD has outperformed NVIDIA this last year. NVIDIA is by far the better company with better results, but a better stock in 2026, question mark?
I mean, like AMD, but like we see these deals between AMD and other companies, and it usually involves giving away equity in their own company. Now, that's not a terrible thing. You know, someone had said, well, maybe it'll help stabilize their share, their stockholder base, and that's certainly true. But I mean, it's very different than, for instance, when NVIDIA approached OpenAI and it's like, oh, you want our chips? Okay, we want some stake in your actual company. One is showing real strength that NVIDIA has. They are the premium company and premium product. That doesn't mean AMD is bad, though. So I like NVIDIA long term. I think it makes a lot more sense. I've always liked Lisa Su. I like a concentrated portfolio. So,
yeah. Okay, let's see. Next question. How do you guys approach selling your winners? That's the part I struggle with the most. I never had a good exit strategy. Yeah, honestly, man, same. I think like if the story is not going my way, or if the story has changed, I try to give it a couple of quarters for it to settle out before cutting. Otherwise, I'll try to keep my position sizes relative to what my confidence is. And so if I'm still confident they're going to keep growing and keep executing, then I'll keep them high. I won't cut them at all. And I might even add to them, like SoFi, for example. Like I bought SoFi in the last month and I've been holding it for 4 years or whatever. So because they're still executing. But the moment that they are not, then it's time to rethink where do I have more confidence.
yeah, throw up Tanner's comment at 750.
Yeah, you don't.
That can actually be the answer too. I think it was Peter Lynch that said, "Don't sell your
don't cut
whatever to water your weeds." Your winners water. Yeah. So it depends. Like for me, I also struggle with this, and the way I manage it is two different strategies. On things like Airtest Systems, where I own just shares and that's it, I force myself at certain levels to sell covered calls. Now, as the thesis plays out, those will get higher and higher, along with the share price. But it's a microcap. I got to take some gains at some point on it versus something like Robinhood. Like I have the shares that I want in Robinhood. There is a price and a point where I would add more shares, but I probably just would add leaps. But what I normally do when I establish a position, especially if I think it's very undervalued, is I'll buy a whole bunch of shares and I'll have some leaps as well. And then those leaps, they expire after a certain time, but I plan to take gains on those. And with rare exceptions, sometimes I exercise those as well. So it's either like keep the shares and sell the leaps unless the thesis changes or things get like really, really silly, like Palantir valuation, honestly, $200 a share didn't make sense at that point. I forced myself through covered calls. That's what I did, by the way, with HIMS. I did not have, and I don't think I ever had options in HIMS, but instead I sold sometimes directly in the market when we were in the short squeeze environment. And also sometimes it was just covered calls that it blew way past. And I'm like, well, you know, $55 a share from like 23 or whatever my average was.
Mm-hmm.
I'll take that and just cry in a pill at night, which I'm certainly not doing right now.
Yeah. Okay, let's see. What's hitting 250 first, Amazon or NVIDIA? That's a good question.
NVIDIA.
Amazon was already there. But NVIDIA has earnings tomorrow. So
yeah, NVIDIA. Everything is confirming like they're a huge beneficiary of what's coming for a while. When the party ends, well, I don't think it ends, but it'll slow at some point. But they should already be there. So yeah, NVIDIA. I am biased because I only own one of those. But are you saying Amazon, Tevis?
Whoa, there's a Q&A function that YouTube has now. I can start a Q&A. That's so cool. Nice. I'm just going to start a poll. Am I saying no? I don't know. I think NVIDIA could hit it. For my sake, I hope Amazon hits it because I have way more Amazon than I have NVIDIA. But realistically speaking, I think NVIDIA can definitely get there faster than Amazon can.
Yeah, NVIDIA, honestly, like I do see some, like Zane said, it's a stable coin. It's not moving. It's actually up a little bit. And if you look at other names that are associated with AI, I'll take up a little bit over what's been happening.
Yeah. NVIDIA has a savings account. Honestly, Amazon's kind of a savings account too.
Yeah, I think so. I like NVIDIA better, but
Meta is as well. Like if you bought Meta 2 months ago, you're buying it at the same price you're buying it right now.
Yeah.
On the aggregate, when you zoom out 12 months plus, they move. So won't the platforms just get oversaturated? So if everybody starts vibe coding their own little tools, won't you just get an oversaturation? Probably, but I still think you're so early. Like, I think one of the areas of arbitrage is like to just build things for people who haven't gone to this stage yet. Like there's a million and one fitness apps, calorie trackers online. There's, face filters, whatever. Like if you go on the App Store, the amount of slop that it already exists on the App Store is insane. But ultimately, it's just going to lead to sort of, filtration system that is filtered by people's votes, right? Like the best product will win. I would rather have, 100 products to choose from and have the best one win out versus having like 5 products to choose from. And, there's not one that's like kind of perfect, but it's just more selection is better. I don't know if I'm explaining that right.
Yeah, I'll say on that, kind of tangential to that. If software costs in terms of time and money go down substantially, which is what's happening, as far as to build and create, you have a lot more that's out there. That's going to drive the need for inference, both in the creation side and also to usage. That's going to drive clouds. That's going to drive energy demand. That's going to also drive things like Palantir that operate on the enterprise layer that they really need to be able to get the most ROI out of a lot of these products and platforms. So if you think that that's the case, there's a lot of ways to play it.
Mm-hmm. Yeah, I agree with this too. Right now is the first mover advantage period where you can build and people will still buy and use it. Hard agree. And I think that first mover advantage period is going to last for longer than you think, because I was shocked when I saw the stat, and I posted this on X. I'll find it for you guys. But this went viral recently. only 16% of people have ever used the chatbot. Only 16%. Okay. Only 0.3% of people have paid for AI. And I said here, at most, 99.7% of the world has experienced AI through ChatGPT's shittiest version. The amount of people who are using coding like Claude Code or something like Codex or something like that is 2 to 5 million people. It's nothing. It's nothing. So you have, yeah, go ahead.
I don't know if I trust that though, Tevis. I know that X is a bit of an echo chamber, and the people that we're around and surround ourselves with are too. One of the things that I saw this week, it was specific. I'm a Christian, and there's a research group called Barna that does all sorts of different surveys and research. And they said roughly 4 in 10 practicing Christians say AI has helped them with prayer, Bible study, or spiritual growth. I mean, that's all LLMs. And pastors indicated about 41% of them had used the AI for Bible study. Now, I don't want to get too deep in the weeds on that, but I mean, if you're seeing Christians and pastors and churches use AI significantly more than that figure that you showed indicated, I would expect there's a lot. I don't know. It just doesn't feel right. Like one of these just seems like it's way off, because Christians are not going to be like, no offense to other Christians, like the earliest adopters and be super adopters of a nascent technology like AI and pastors. Right? It's the vibe coders. Pastors are vibe coding, I guess.
The reason, like when I looked at that number, my skepticism was more around the forced usage. Like if Google is shoving Gemini down everybody's throat, then you're going to have somebody, making one prompt or whatever, and that would artificially pump up the numbers.
That's fair.
Even if you assign a plus minus of 20% to that chart, you're still way ahead of the curve. And so I think that is something you can definitely take advantage of, because not only are you ahead of the curve, but the curve is disproportionate depending on different verticals. If there's some verticals that don't use AI at all, for example, legacy industries or whatnot, like the opportunity is even bigger there.
Yeah, Tanner doesn't believe it either. So high five, Tanner.
Does OpenAI publish their paid subscribers?
I don't know if they do, but there have been reports that have issued that. I think they do though.
Yeah, I not sure. All right, let's go to the next question. How are we feeling about NVIDIA tomorrow?
Good. I mean, it's NVIDIA, Jensen Huang, best or one of the best companies in the world and one of the best leaders in the world. So I just don't know that there's anything that they can do or say to move the markets. They're going to do great. Glad to hold them long term, sleep like a baby. Like NVIDIA is one of 3 positions that I have that I almost just don't even need to like look at the news or anything. I just, let them work, let them cook. Nubank is one, and then Tesla just because it's so small. But yeah, everything else I got to pay attention to. So
that's interesting. The only thing like that for me is Bitcoin, and I think for me it's because I have to like do a whole song and dance around like storing it and locking it up and all this stuff, and I'm just like, it's not it's not top of mind for me. And so I don't think about it at all. Only when I see people like panicking on X, oh my God, Bitcoin's under 65. And I'm just like, I don't care.
Yeah.
OpenAI currently has approximately 35 million paid subscribers as of early 2026. This represents a significant increase from the 11 million people reported in late 2024 and 20 million in late 2025.
Can you throw up George Silva's question? I like that question.
This one?
Yeah. So Jensen made comments a week or so ago about working on a chip that the world has never seen, which I don't think he's just meaning like the next generation of whatever chips that they have right now, just because, I mean, yes,
Shock the
technically
world.
true, but yeah, exactly. I don't have any particular insights. They have talked about silicon photonics for a while. Maybe it's something along that line, but it could be something relatively novel. Now, the one thing that's pretty much for sure is it's going to be very, very good. It's going to be very expensive and very complicated. You know what company is really good and benefits from that? Air test systems. I think that's one of the reasons, honestly, why, at least last week, why it was pumping is the increased cost of failure and ramifications thereof, and also the increased complexity. They're all drivers for the automated testing equipment side, especially moving things further upstream. So, yeah, that's the only insight that I have. But it'll be really interesting. Like, I don't think it's, yeah, is he working on a chip to kill quantum? I mean, it could be something along that line too. We'll have to see. But
yeah, definitely. I'm sure there's other NVIDIA questions here as well. If Noto buys SoFi, how big of a position does he buy? I think his average is like $500,000 per purchase on average, something like that.
yeah, we don't know his monetary situation, but it's been a while since he's bought. I think this would be a pretty sizable one, like bigger than his average, if he buys. Because like when you guys had the interview and he talked about that pretty directly, SoFi was trading at like 25, 26 bucks a share, if I'm not mistaken. And even then he was like, yeah, it's undervalued. I would love to buy it. I can't until after this date. Material non-public information as well might be a factor. And now it's trading at 18.
Yeah.
Plus, like him buying, I think might save SoFi from falling under the threshold for S&P 500 inclusion.
It's possible. Okay, so if SoFi was at $8 and Nebius was back in the 20s, which one would you load the boat, assuming you had an equal port size in both companies?
Nebius.
Probably. Yeah.
Loves, like SoFi should not go to 8. Nebius should not go to 20. Both are screaming ridiculous buys. If I have to pick one, it's Nebius. I mean, you know, of course, it depends on the reason, but let's just say it's exact same situation as what we're at. The only thing that's changed is share price. It's tough to argue against 500% growth that looks very durable in the face of what's happening. I mean, like they're not going to do 5% every year, but they're going to grow a lot, rapidly, incredibly.
Yeah. How much of your salary do you set aside for investing? You guys always seem to be going full send.
Yeah. For me, I am not a single guy. Unlike Tevis, I have a wife and 3 kids. Now, one of the kids is basically kind of on their own. We help him out just a little bit, but he's basically autonomous, doing quite well. I think he probably has more in the big account than we have, honestly. But I have a certain percentage that I allocate. Some of that goes directly to Bitcoin, but it's not a sizable amount, honestly. I would love it to be, but like the PhD I'm working on is expensive. We're about to send our daughter to private school in the fall. That's expensive. We're helping our middle son in the fall as he goes back for mechanical engineering with tuition. That's expensive too. And my wife doesn't really work. So yeah. And what Tevis knows what I do. It's not the highest paying career. I love it. It's my dream job. But yeah, reality is I have some money that comes in the market twice a month, sometimes more. But yeah, it's not an insane amount. I'll put it that way. It's less than 10%.
Well, I actually have this mapped out because I'm super just like that. Here's what that looks like for me. And yeah, in previous years, it's been as high as 66%. And usually it's about half. I don't know what it's going to be in 2025 because I got to do my taxes for this year still. But yeah, ever since I started investing in 2017 and now, it's the lowest it's ever been. It's 26%. The highest it's been is 66%.
Yeah, and like I'd say, to our audience, like try to invest some. Like even if you're at the point where it's like, dude, unless you're like up to your eyeballs in debt, get the debt paid off, especially if it's higher interest. We have some debt, like mortgage, and we have like a 2% APR on the Tesla. But outside of that, like we try to stay away from debt. But even if it's like you can only spare $50, you're young, you got a young family, it's just tough. Get that started. Just have that be taken out or put in automatically, and then increase it from there as your salary increases. Look for ways, by the way, to increase your salary, especially if you're not making very much, and that can help you a lot more down the road than trying to figure out the best investment with $1,000 in your account. It's going to be tough.
Yeah. Are you guys into precious metals in any way? No.
I have some silver. Silver that I bought in like 2013. So, but I sold a lot of it. I think $30, $33, something like that. So, but that was when we bought the second Tesla. I'm like, hey, I'd rather sell. I wanted to pay off the one Tesla and just have one car note. So it's like, let me sell some things. So I sold a little bit of stock, but I preferred to sell precious metals. I mean, honestly, that was the wrong side of things, but usually precious metals don't have something that triples in a year.
Mm-hmm. Yeah. Was the entire market riding on NVIDIA?
No. People think that, but no. There's literally nothing that they can say. They'll have very good earnings, and I don't think the market will do much either way.
Yeah. Let's see. One stock to invest in for the rest of your life, which would you pick? Probably one of the Mag 7.
Yeah. I'm tempted to say Palantir, but I don't think I can. If I'm forced to just have one and hold it, NVIDIA.
It's a good pick. Yeah, it'd probably be one of the Mag 7. I'm not sure. Or yeah, I think Gerald said it. SPY is also good.
Yeah. I mean, like obviously, if I could do an index, then it'd be the SPY or VOO or something. SoFi's version, yeah. But yeah, if it's an actual company, it's got to be like you can't be risking your life and your retirement unless it's a company that's going to be here a long time. So like most of the Mag 7, except for maybe Tesla, which I love Tesla, but that one has more risk in it. So you got to move away for some risk, which is why I can't pick Palantir. I can't even pick SoFi. Google would be a good one too. Amazon.
Yeah, like I don't think you can go wrong with the Mag 7 names like Meta, Amazon, Google, Microsoft, NVIDIA. Let's see. Does Nebius build data centers with AMD chips? We always hear about their relationship with NVIDIA. If they don't, do they try and start to add that to their business? I'm not sure actually if they use AMD.
Yeah, I was going to let you answer that.
Yeah.
I remember knowing at one point when Manuel did his pitch, but I don't remember now.
Nebius primarily markets the use of NVIDIA. While their primary selling point is NVIDIA acceleration, they frequently compared to or grouped with AMD in an investment portfolio, blah, blah, blah. Yeah, I'm not sure if they use AMD chips, Matthew.
If not, I mean, even so, they're mostly NVIDIA, but.
Yeah. Does Nebius sign another hyperscaler contract this year? I think so. I think Amazon is the one that I'm sort of Like, I think in my predictions, I think they sign Amazon, and I think they expand Microsoft, or they expand Meta this year.
I think Amazon is very likely, and I completely agree with you. We saw massive pushback, or at least a good bit of pushback against the equity raise and the capex spend. What that is going to lead, I think, hyperscalers, not just Amazon, but certainly Amazon, to do is kick the can down the road on building their own. So yeah, they'll do it through a contract, which will set shareholders that are holding Amazon and others up. But the thing is, it's going to also increase capex that Nebius has to do too. So, but yeah, I think it's very likely.
Franzi says Meta expansion is a done deal in a few weeks. Blackhawk says they use AMD EPYC, not EPYC CPU, not GPUs.
Okay. Thanks, Blackhawks.
Okay. Let's see how many people can get away with not paying for it, though. AI. I feel like the free versions are more than enough for most. For most, sure. But you have to keep in mind that we're going to go into a world where the use cases are expanding for it. And once you get into like these agentic use cases and plugins and add-ons, I think there's going to be more monetization opportunities for these LLMs. And I think sooner or later you will begin paying for it. It's like saying like streaming, for example, right? Oh, you're going to cut the cable, you're going to get Netflix, and like you have one subscription. Well, it's like all of a sudden you're subscribed to like 5 streaming services. Why? Because the content libraries expand across the board and different companies have different IP. So I would say similarly, more and more people will be pushing to pay for it because I don't know what Roy just saw.
Crypto.
What about it?
It's shooting up.
Nice.
BMNR also back above 20. Ethereum up now 4.5%. Bitcoin up about 4%. Solana, I mean, like, of course, when Bitcoin pumps.
Bitcoin may be catching a bid because Chain Street is under scrutiny. What world do we live in, man? I swear.
Wouldn't it be wild, like, if mini crypto winter was like, it's done this week? I don't think so, but like, hey, I am in a lot of crypto exposed names. I would love that to be true. I don't know about that. But
I mean,
yeah.
Tom Lee was out saying we've hit the crypto bottom, but he says that every week though. So
yeah. Long term, I think he's been right, very consistently on crypto and equities too. Short term, crypto is just hard to predict, man. Like, I can't. If Tom Lee can't do it, there's no chance that I can do it. So. Yeah, Yan said fake pump before State of the Union. Like we mentioned that, like crypto it is very likely to be mentioned in the State of the Union. It could be that people are front running that. We'll have to see. Yeah, Matthew, same kind of idea. So, but hey, if it's the bottom, awesome. I mean, it could be. We've seen that before too. So, but I mean, like. He can't just wave his hand and get the Clarity Act passed. Now, I think if the Clarity Act was a done deal or virtually a done deal, we would have already heard that. We did hear a little bit last week on it, but
yeah. On Friday streams, why do you say next Tuesday and instead of just saying see you on Tuesday?
Because we don't travel back in time.
Because yeah, that's a better answer than what I was going to say. I was going to say because I'm a fucking fob, Catherine. Okay, that's why I say next Tuesday. English is a learned language for your boy. All right, shall we wrap there, Roy?
Yeah. Let's wrap. Thank you guys for being with us here today. As always, we like talking stocks anyway. It was just Tevis and I. We'd still have a good time talking, but it's a lot more fun with you guys. So we really thank you guys for being here with us, answering some amazing questions. When we don't know the answer, usually one of you guys do. Love that. So thanks for being with us, making this a lot of fun. And until Friday, happy investing.
See ya.